the last 3 decades, trade has grown twice the rate of global GDP. It has expanded 7% between 1980 and 2011. Today I'm joined by an expert on trade, John Hancock. Welcome.
Thanks to have me.
So John, how do we get back on that path again, and what are the driving factors and implications?
Good question. I think the debate really is, will we get back on that track again? As you pointed out, since the Second World War really, and certainly between about 1980 and 2011, world trade growth was roughly double world GDP growth. So in other words, the world was integrating at a faster rate than it was growing. And that all changed with the Lehman Brothers collapse in 2008 and the giant financial crisis, the Great Recession. Everything plunged after that date. Global GDP plunged by by over 3%, but trade plunged by an astonishing 13% in 2009, a dramatic drop-off. It subsequently recovered, but it hasn't recovered to the path we saw prior to the financial crisis. And there's lots of reasons for that. There's a lot of big shaping factors that maybe were in evidence before 2009 are less in evidence now. For example, one big question mark is China. For 30 years, China has been growing, as we know, at a breakneck pace, and it's been an export-led growth model. Can China continue growing at 9-10% a year? It's not doing so now. There's some thought that as it reaches middle income status, its GDP will slow, and there's certainly some question whether it can continue to rely just on exports to propel its growth. The United States consumer is clapped out. Their visas are maxed. The government's visa is even more maxed, and can it absorb all these Chinese goods? So there's the China question. Will China continue to exert the same pull on world trade as it has in the past? There's only one China that comes along every century, and it's already come along. Another big question mark is the role of services trade. Services trade is growing relative to merchandise trade, growing faster than merchandise trade. But there's something funny about services. A lot of the services that you and I use, we consume locally, or at least nationally. You think about it, we go to the local hospital to be treated by a doctor. We go to the local school system to be educated. We have our hair cut by the local hairdresser. Up to now, you're not able to do that over the internet. So will an increasingly services-dominated economy mean that trade is, in a sense, less important to world GDP growth than it's been in the past? And finally, I think another interesting dimension is robotics. A lot of the huge explosion of trade we saw in the previous 3 decades was the increasing division of labor in the world economy, where low-wage labor, hotspots like China or Vietnam or now India, got the low end of the manufacturing and increasing the middle end of the manufacturing, while the advanced world focused more on services. As wage rates go up in these countries, and they are going up, especially in China, and as robotics take a bigger share of the manufacturing pie, do you need your robots to be located in China, or can the robot be located in the United States, Switzerland, Britain?
And so what growth number do you expect to have this year?
Well, this may have been a sluggish period for world trade growth. We're now looking at a world where GDP growth, according to the IMF, is averaging out around 2.9%. World trade growth is 2.5%. The pessimists are saying, for all those reasons I gave, maybe we won't see ratios return to the 2-to-1 ratios we saw before the financial crisis. Maybe it will be more like 1.5% trade growth. But my personal view is that trade growth will return. I think it's unduly gloomy to say we've had the age of trade is over. For example, China its growth may slow, but China's got a long way to grow before it reaches U.S. levels. Per capita GDP in China is roughly 10,000 per person. Per capita GDP in the United States, 28,000 per person. It can get a lot richer in the short term. Then there's China, then there's Africa, whose trade is growing quite rapidly. So I'm not so sure that this hand-wringing going on right now over the future of trade is not so much less a long-term phenomenon than a short-term phenomenon.
And John, Canada and the EU just signed a free trade agreement. Can you tell us some more about this?
Well, that's a good point too. I mean, again, contrary to the pessimists, they said globalization is slowing, globalization is ground to a halt, or the ultra pessimists say globalization is going to go into reverse. But Canada and the EU just signed a free trade agreement. That's the first transatlantic trade agreement since the Second World War. That's a big deal, and countries have been trying to do this for literally decades. The US is talking about a free trade agreement with the European Union, which would create the world's largest free trade bloc, half the world's GDP in one trade agreement. Of course, the US is also engaged in trade negotiations with Japan, Australia, New Zealand, Canada, and at least 8 other countries in this vast trans-Pacific trade partnership agreement that they're pursuing as we speak and hope to conclude by the end of the year. So there's a lot going on. There's also the WTO's trade ministerial meeting coming up in Bali in December, where WTO members, the global trade body, is trying to put together an agreement on a number of issues, but most particularly on trade facilitation, cutting red tape at the border. So the idea that trade liberalization has stopped and the world has returned to protectionism, there is episodic and isolated cases of returns to protectionism, countries backsliding on their commitments. But for every one backsliding policy, there's 2 liberalizing policies, as a matter of fact. So I don't think the world's in such bad shape as far as trade liberalization is concerned. The big worry, of course, is really the US. For 60 years since the Second World War, it's the US which has led on trade liberalization. And a lot of questions are raised now. Do they have the same stomach for trade liberalization? Does the American public have the same stomach for trade liberalization? This gridlock we've seen in Washington recently over budget issues, is that kind of gridlock going to translate into trade policy? But if we look at the Transatlantic Initiative, if we look at this Trans-Pacific Partnership Initiative, the U.S. Continued leadership in the WTO, I wouldn't count the U.S. out yet.
John, thank you very much.
Thanks for having me.
And thank you for watching Dukascopy TV. Do stay tuned as we have plenty more coming up on the show. See you soon.